Well, Canada's banks may have emerged from the global banking crisis intact, but the ripple effects are still being felt by cash-strapped businesses. A new generation of boutique banks is offering businesses another option when the other banks say no. Kristiaan Yeo has more.
The global financial crisis in 2007 was a huge wake-up call for banks. Those which avoided seeking taxpayer bailouts reined in lending at the very least. Risk replaced growth as the industry's chief concern. Many previously credit-worthy companies were left high and dry.
We had clients who actually had to declare bankruptcy because they couldn't access liquidity in the wake of the credit crisis. And that made us realize the fickle nature of the large lending institutions.
Colin Kilger and Daniel Williams started their boutique investment bank to serve the growing number of companies which found themselves denied credit by the big banks. They're in the process of raising $100 million to lend to cash-starved mid-sized firms. Those who provide investment can expect healthy returns that will be hard to achieve in today's climate of low interest rates. The pair's business relies on the major banks maintaining stringent lending criteria. Conditions are a long way from returning to a credit free-for-all, but there are signs banks are easing off the brakes a little.
When you look at bank lending activity on the business side, we've actually been seeing an acceleration in that. There's a couple of reasons for that, including low interest rates, across the board, and that's been incentivizing businesses to borrow. Certainly there are some sectors and some pockets where it's been challenging to get financing though.
And it's those dry pockets of the economy where Colin and Daniel are firmly aimed, a market which the pair sees as only getting bigger.
We are going to start to see a retrenchment of some sort, and folks who are kind of on the bubble of do they fit within the bank box or not are going to potentially in the near term find themselves outside that box, and that creates opportunity for us.
Small boutique lenders were in abundance before the financial crisis, but few of them still exist today, mainly because their own investment channels dried up. This new breed of lender could fill that vacuum and give more companies a much-needed cash injection. Kristiaan Yeo, CCTV, Toronto.